Hello, guys. Welcome to the new podcast of CFO Pulse. Today, with us, we have an ex-banker who is ex-ICICI, ex-Edelweiss, who has worked in last 16 years in the industry of loans, financing, and funding. And last 8 years, he has been running a super brand called Totalgenix, which works only into credit solutions. Her name is none other than Chandralekha.Chatterjee. Welcome, Chandralekha, to our podcast.
Thank you, Omkar, for this lovely introduction. And I have definitely seen a lot of your content online. And today, I have come here, and I'm really happy. Loan and finance products, to be able to talk about that, it has always been a dream. Thank you so much.
Fantastic. We are honored to have you here.
Thank you.
So, Chandralekha, today you're here as someone who works excellent in funding, and you know the credit space very well, how the economy is shaping up. And talking about economic shaping up, we are talking about MSME industries because that is the biggest factor in India's growth. And CFO Pulse works with MSME industry very closely. So while we are talking about India growing, becoming the third largest economy in 2028, $5 trillion economy, and whatnot, we are in the golden era of our huge development as a country. While that is being true, I recently read a very shocking stat. The credit gap in Indian industry is around 25 lakh crores. This is from RBI, and around 99% of all the businesses is MSMEs who have access of just 6% of the total credit available in India. So roughly rest all 94% credit is enjoyed by the top 1% of the companies. When I see this, unequal credit distribution, I feel that is the biggest hindrance of, equality in the growth which we should be seeing. It should not be just, top 5% Indian companies contributing to 95% of GDP, which is the current ratio. When we are saying the India is growing, we would like to see the equal growth, and I feel credit is the backbone of the growth of industry or economy wherever you go. So, as a someone who working in credit so closely and probably interacting with 15 to 20 MSME owners daily, new MSME owners, okay, at your end, what do you see? What is the challenge of, and what is the reason for this huge credit gap in MSME?
So, Omkar, thank you for this question. First of all, you have rightly mentioned that MSME today in India contributes to 30% of the GDP. But when it comes to the access to credit, you will only see 16% or max 19%, 20%. That's what is, that's the figure that we get. So why exactly this? The only reason that I will talk from my own experience, what I see day in, day out while, interacting with so many MSMEs and dealing with them, trying to get funding from various government institutions or banks, NBFCs, or taken together. So this MSMEs, first of all, they are coming from a very unorganized sector.
Correct.
Then they do not have the financial literacy, which is
so true.
Which is the real cause behind this inequality.
Wow.
So we always look at fundraising from a perspective of just one particular transaction of going and getting a loan. But when we as a SME consultant look at it, we try to understand that first it starts from your preparation of your books.
Okay.
If your books, your documentation or availability of collateral is there, you know how to interpret your business, whatever is happening in your business, the interpretation has to be very accurate in the books. Only then can you have the accessibility to these kind of credit. So government is always, getting this new incentives, they are designing policies. New schemes, yes. But end of the day, the success of these schemes will only happen when our MSMEs are aware of the right kind of representation of their business.
Correct.
On books, on papers.
So true. So obviously that is the start, right? Your eligibility to access that credit. So what you rightly said, credit is always available. It has always been available, and it will always be available from the side of banking, government, and everyone, all the financial institution bodies. But it is the I mean, gap is at the MSME's end.
Yes.
So one of the gap you just mentioned, that the books probably not as clean as they should be in terms of accessing the credit, and books also not showing the true real numbers of the business.
I'll just like to, quote an example here.
Correct.
So, majority of the clients who come to me, they will come to me, and typically I'm talking about the micro and small medium enterprises.
Right.
So the micro enterprises owner will come to me and they say that, I am doing a business of around 1 crore. Let's say my turnover is 1 crore annualized. But when I actually see their books, what I see is only 20 to 30 lakhs is what is actually shown as a revenue.
Oh.
Yes. So what is exactly happening? So
Correct.
somebody out there is saying that, you do not have to pay so much. So, random replies that I get, why do I have to pay so much of GST? So that's why I try to, keep my turnover below 40 lakhs. Or they will say that we don't want to pay so much of tax. That is the reason why we do not prefer showing on the books. So we do maximum of our turnovers in cash. Then how will I get you the loan? Okay, so I will only consider 40 lakhs, and then on that whatever is applicable. So let's say 20-25%. If I'm talking about a working capital limit, if I want to get under various government schemes like Mudra or CGTS, and there are so much of this likes. So this will only happen when the representation will be right. And so there are also cases where the customers, when I ask, sir, अभी तक का turnover कितना हो गया? Actually, system में देख के बताना पड़ेगा. So they are not even aware what is happening.
About the actual numbers.
Yes, actual numbers. Yeah. So there has to be a proper guidance from. So and also I would like to point out this particular issue. So SMEs always feel the need to have an accountant. They will always have an accountant in the company. Okay. Then they will always have a chartered accountant. Yes, because that is the guy who is actually filing the returns.
Correct.
So these are the two set of people who are so called the finance managers. So you understand where is the gap? So accountant is actually doing the data entry job.
Right.
Okay.
Recording of transactions.
Yeah, recording of transactions. And the chartered accountant is just taking the data which is, which he assumes that he's fed the right data. He is just pulling and he is just giving out the report. So here there has to be somebody like, your CFO Pulse or any virtual CFO. So there has to be a smart finance manager who is actually taking those data and representing it in a manner that you are actually taking business calls. So if let's say I see that my capital, so there are these SMEs today, they're for their child's education sake, they're actually withdrawing capital. They're paying somebody's college fees. Yes.
Expenses from the business.
Yes. Or else, let's say a company owner who is into small automotive tools component manufacturer. So he is actually funding his wife's business with the funds or the capital. So what will happen? So in his asset size, there is a item called loans and advances. So I can see that there is a lot of money which is getting diverted from the business. So what is happening is my capital is becoming negative.
Correct.
And when I go to a bank to raise finance, the banker says, sir, सब कुछ अच्छा है, business तो सही चल रहा है, लेकिन पैसा कैसे दूं? Capital negative है. So these are the problems which exist. So we need to have proper financial guidance at all levels.
Correct. Absolutely true. I mean, the first impression is always not about how good your business looks from the outset. It is always what numbers you have in reality on your audited papers, filings, audited balance sheets. So very true. Mike, then to understand this, I would ask you a little further. You spoke about how personal expenses being done from a business. Okay, I've also seen that loan is taken for X purpose and then utilized for the purpose Y, and as a result, then business goes into endless debt trap, because by the time for the purpose for which money was originally bought, when it actually comes, that situation comes across, you don't have money left because you already utilized it for something else. what do you see, in such cases, or I would say not just in exactly these cases, but like you said, red flag, capital negative or capital very minuscule. What are those red flags you see when you look at the financial statements that this will be outrightly rejected by banker? No banker, no NBFC, no institute will fund you if you have these 3, 4, 5 red flags on your books. What would they be?
Okay, so I've already mentioned about the capital.
Yeah.
Your capital. So I'll just give you the ideal scenario under which your transactions will definitely go through. Let's take it this way. So rather than pointing out the red flag, I will tell you the right mix, what you should be doing.
Okay.
A thumb rule kind of, you can put it that way. So any company, let's say the capital. So how much should be a capital? So simply put, minimum 25% of the total turnover.
Okay.
I mean, this is an ideal scenario.
Thumb rule kind of.
Thumb rule kind of. If it is possible, best. Then you cannot go wrong.
Okay.
Your debtors can be at max 30 to 35%. If it is exceeding that, that means there is pressure.
Oh, right.
Your realization is slow.
Yeah.
Then if your creditors has to be half of your debtor, otherwise you will not be getting that working capital gap. Because your stock plus debtors has to be higher than your creditors. So again, so in working capital, in order to get a working capital product, which is a CC limit.
Correct.
What we have to see is whatever is your working capital gap. How do you understand working capital gap? It's nothing but a simple calculation, which any layman can also understand.
Correct.
That is your stock plus debtors minus the creditors.
Correct.
Whatever that amount is, 70 to 75% can be funded.
So it's called, I think, drawing power.
Drawing
current asset
power,
minus
the
current
DP.
liabilities. The drawing power.
Perfect. So in this case, how will you actually ensure? So I'm not asking you to manipulate this data.
Yeah.
But you will, so like the way I'm saying, you will perceive it as a...
Correct.
No, what I want to say is like, if you see the levels rising beyond this threshold, then immediate alarm should be, on that. Yes, there is something which is going to be mismanaged. Some, controls are not in place. So this is exactly how. So this is about the drawing power. Then I have mentioned about the capital being negative. Then I have already mentioned with an example that you should not divert funds out of your business. Like you do not do non-business expenditure with your business funds.
Right.
Yeah. So this is a diversion. Then there is one more red flag. When can somebody fall in a debt trap? Most common thing that we've seen. So you get a CC limit. Now you are using the CC limit for long-term expenses.
Exactly.
So that is the blunder, I could say. That is something you should avoid at all cost. Even if your CC remains unutilized, it is fine, but do not do that mistake. But what happens is you are actually thwarting your business growth. How? Because tomorrow when some good orders come your way or some big projects is
you don't have the funds to execute.
You don't have the funds to execute. Then you will go out and you in search of suddenly you will realize I need so much funds to execute this order. How do I go about? Then you go for some unorganic product. So no product is inorganic. Okay, so every product is to be used when there is a need. So product has to be need specific.
Correct.
Okay, and then again coming back to the red flags as you asked me. So there is one more red flag. Many a times client is asking for loans, but they have projected a turnover of around, let's say, 5 crores in last 12 months. Okay, that's what they have disclosed, like tally backups or their GST returns when we go back. But the same thing is not shown in the books. That means your realization is not in place.
Correct.
And if there is a difference of more than 20-30%, so let's say I see a 5 crore turnover which is projected, but against that the banking calculation when we add up all the credits, so that is coming to around 3.5 crores. So that means yes, there is definitely something going wrong big time. And there are many a times there are clients who are doing transactions within their own group of companies. So what is happening is they are taking that they leverage it in a manner that the payments has to be realized from their internal company. So they don't really, it does not really come in, let's say, 30 days, 60 days as compared to the other
Correct.
clients. So this is another red flag. So that is also going to impact your overall calculation of working capital.
How much sales concentration impacts negatively? For example, my revenue is good, but like 90% of revenue is just coming from 2 or 3 clients. Okay.
Yes.
And if, because it is so much dependency on those 2-3 clients, the concentration is so high. I have noted this, and banker always come up, like credit manager always sees this as a huge red flag, because they see that if that client is not there tomorrow, this business will not be able to run, because dependency on 1 or 2 big orders or 1 or 2 big clients is so much.
Yes, so when your dependency is, more than 50% or 60% towards a single client or 1 or 2 client at max, so what happens is it clearly shows that, you are at risk. What if the customer is no more there? So you are exposed. So your entire business can actually come to a stop. So that is the reason why we say that at least never give so much power to one customer, so that one delay in payments can actually shake your entire business cash flow.
True.
So that is not a very good scenario, and banks also will not like to touch those kind of clients, or even if they do, the funds will come at a very high cost considering the high risk scenario within the organization. So that is the interpretation how banks will consider.
Correct.
Yeah.
So you have already mentioned this, books not being proper, documentation not being there. What required to clean these books and maintain? You have rightly said that there is required an expert financial manager, probably a agency or consultants who provide a fractional CFO service, and they will help you fix this thing. But what if now, obviously fixing these things will take time, but I still want access, I still want loans. Do I stand any chance to get access to credit, or there is no chance? What happens with these clients actually?
Okay, so these are some specific cases wherein, let's say, when
You do share your experiences. I'm sure you would have seen such cases,
Yeah,
and
every day.
that is where your real skill set or real game of Totalgenix comes into picture. So I would really like to understand 2-3, such stories where you have turned around the entire game.
Sure. So there was let's take the example where I said that the capital is negative. Okay. So wherever the capital is negative, so yes, holistic products or the products which come at a very good cost of borrowing is low. So we cannot actually have access to those. But then we can go to a high cost borrowing option, wherein either we can go for unsecured business loan. So what we will see there are various different kind of product underwriting which happens. So here the banker will see that fine, even if the capital is negative, but what here is favoring the customer is the, let's say, the collections are fast. So the kind of per month collection vis-a-vis the kind of expense per month. So there is still a gap.
Right.
So banker will
cash
see
flow
that.
Positive.
Yes, he is cash flow positive. So in that case, they will see that how much is that positive. So according to that, they will find out a middle ground and find that this is the kind of EMI which the customer or the client can still afford to pay. And that's where they will give a certain amount as a term loan for 3 years at a high cost. Typically it starts from the lowest is 14.5-15%. It goes as high as 25-30% also in cases.
But the credit starts, and later on this can be.
So this is one of the product which I have said. Then there is a much better product where whatever is your financial, unless you're not really making losses in your books, you can go for either bill discounting. So it can be your purchase bill discounting, or you can go for your sales bill discounting. So purchase bill discounting and sales bill discounting will only focus at your positive cash flow. What is your banking turnover, like whatever you are projecting or whatever you are actually disclosing that this is the kind of turnover we have done, and the same should at least 80% of that effect should be seen in your last 12 months banking.
Correct.
So if that is there, and last thing that they will see is, who are your clients, how are your receivables, are they coming, so are they, really fast. If it is within 90 days or at max 120 days, then again they will see that fine, we can still go ahead and fund. And here there are a lot of NBFCs where they don't keep the recourse to the supplier, but they will put the recourse on our customer.
Okay.
So that is where it is like a loan, a debt product typically.
So just to explain to audience, what would you say what would you mean when you say recourse, not with recourse, without recourse? Can you explain in a simple language for our audience?
Yes. Recourse, okay. An example where I am supplying to Omkar.
Okay.
Now Omkar is liable to pay me, let's say 50 lakhs. Okay, I have allowed a credit period of 60 days. Now Omkar is not paying me in 60 days, but he has extended 90 days. But the finance provider, that is my NBFC, who has actually discounted that bill, he is allowing me 90 days only. Okay, so now if Omkar is not paying in 90 days, so the liability of payment lies with
shifts to
me and not Omkar.
Okay. So this is with recourse?
Yes. So this is without recourse.
Without recourse. Okay.
With recourse is, the obligation is not mine if my customer is not paying to me.
Right.
So there are certain products in similar fashion, but that is called as anchor bill discounting, where Omkar is actually providing me with that kind of facility.
Okay.
Yeah.
So in purchase bill discounting, let's say I have
this was an example of sales bill discounting. Now purchase is different.
Bill?
So purchase means, okay, so same, I am the customer, I am purchasing from Omkar.
Right.
So when I am purchasing from Omkar, I am liable to pay you.
Correct.
But now I feel that, I have many orders and I don't really want to use my working capital limit because I have already used 80-85%. So further utilization will actually bring me at a high risk position.
Correct.
So here what I would do is, yet I want to increase and grow my business and I want to use leverage here.
Yeah.
So how am I doing that? I am taking a purchase bill discounting wherein, let's say you're again supplying me goods worth 50 lakhs. So here I say that 90% of your payment is actually given to you by the bank or NBFC, whoever is the investor.
So your purchase would be financed by a banker?
Exactly.
To certain extent.
90-80% depending on
what tenure I get, like the same credit period which is given by supplier.
Credit period is typically 90 days on an average, 90 to 120 days in very rare cases, but typically 90 days. So what I have to do here is, I have to arrange that funds, like whatever it is, 50 lakhs. So I will pay the bank the 50 lakhs and immediately next day I can open another bill.
So how much is the interest rate in this case?
So interest rate
annualized basis, how much I end up paying?
Okay, so I can give you a range because this bill,
of course,
purchase bill discounting, you can get it from a bank who is your primary banker also, and you can also get it from a NBFC, investor-led NBFC. Okay, so where the rates are slightly higher, but they give flexibility because here with banks they have certain list wherein those have to be corporates. When I say corporates, the suppliers turnover should be more than 250 crores and they should have anchor bill discounting facility with the bank. Only those clients will be allowed.
Okay.
But in a case where a client is coming and they want to just leverage because they foresee some good order books or whatever. So in that case, we can also take them to a NBFC, investor-led NBFC, where they will lend at a higher cost. So if you ask me how much, so I can give you a range. So if I'm doing it from a bank, 0.85% per month, it ranges from there to it can go up to 1.5 or 2%.
So 10 to 18%, that is the range.
10% to 24% can be you can say that is a broad range.
For investor-led?
Investor-led is
same, but it will be at higher side, 20 to 24 probably, or above 18.
So anything which goes above 15, 16 is investor-led.
Is investor-led. Okay.
In rare cases, it can be lower than that also, but those are not the norm, the usual norm. So
Correct. So now we have very well discussed the scenario where books are not being there or documents not being proper. The organizations or the clients of us not getting the access to the credit.
correct.
And then there are certain solutions yet that they can still have access to a credit, but these will be a high, high rate of interest or high cost products. Now there is another set of businesses which I see who don't want to have a debt, who have certain negative sentiment about debt. Loan नहीं लेना है, हमारा business cash rich है. They feel proud to say that okay, we are debt free or we will be debt free in next 1 year. Now I don't understand how to handle or how do you look at such scenario, because then that is also creating a credit gap. So what do you see here?
What is even debt free or cash rich? I don't understand in a business perspective. Now, if somebody is a salaried and he said, I am sitting on a lot of cash and I have a lot of savings, समझ में आता है. Business करने निकले हैं and then you are saying that मैं cash पे बैठा हूँ. So it's very contrasting.
Right.
As a, finance person, I look at this scenario like you are just satisfying your own self here. Simply put.
Correct.
Okay. Why do I give this kind of statement is like, I'll give you with an example. So let's say I'm a manufacturer, okay, and I have 5 crores with me. Now I am set out to do a business. So I am going to deploy my own funds without taking any external borrowing, loans, nothing. Now that 5 crores, let's say I'm deploying. Out of that 5 crores, 3 crores I'll be using to purchase machines and capital expenditure, factory, what expenses.
Correct.
Okay, so that is a long-term expense. So I will not be using that for everyday working capital.
Correct. That is to build the assets basically.
Perfect. So now only 2 crores is at the disposal for me to run my working capital expense, the overheads and other things, procurement of raw materials and stuff. So let's say 2 crores is what is invested in the business for working capital and I'm rolling. So my working capital cycle, let's say 60 to 90 days. So 5 times is the rotation.
Right.
Okay.
Correct.
So I'm rotating that 2 crores 5 times in a particular year.
Correct.
Okay. Now here, let's say my margins are in the range of net margin. Hypothetically, 15 to 20%.
Okay.
Okay, so 15 to 20% if is my margin, so my turnover is around 8 to 10 crores.
Correct.
Okay, and 10% also if I
so I mean close to 1.5 to 2 crore max, 15 to 20%
Yes.
if we calculate out 10 crore. Correct.
Yes. So out of that also, good 50% is blocked in way of receivables and
so it's
my
a book
stock
profit.
Yeah.
Actual realized profit would be still at a 50% of the
Yes.
book profit.
So which is coming to, 20 to 25% is what actually you are making out of this business.
Yeah.
So this is the profit which you are actually taking home, or that is tangible.
Correct.
You can use that money.
So on an average, actually, it comes to even after doing 20% of net margin, you might end up realizing only 10 to 12%
Yes.
of the invested amount.
After
Correct.
investing 5 crores.
5 crores. Correct.
Yeah.
So that is too less now. Correct.
Yes, that is too less. So
Correct.
imagine a promoter who is like working the entire year, managing delayed payments, then getting clients, then managing day-to-day activities. After doing so much of hassle, you are ending up with such slim margins or
paper thin margins.
paper thin margins. So I would suggest you can just get a wealth manager for yourself and ask him to deploy it in some very aggressive stocks or
small
PMS.
cap, mid cap.
Yeah, whatever. Do your best and get the
and still make better.
Yeah, at least in today's scenario, even mutual funds will give around 15 to, on a very higher side, 20%. So why do I do so much of hassle?
Right.
So that is my point. Now here, let's say I have that same 5 crores and I go to a bank and get another 5 crores. Like SIDBI will easily give you that 3 crores which you are planning to invest for your machineries and you want to, so go to SIDBI, get that funding at a 7% rate of interest. So what are you doing here? with the same amount where you are earning 25%, you can actually make the double, and 50%, that is also something which is tangible.
Tangible. Business
So-
has to grow on volumes.
So leverage is the business advantage here.
Correct.
Doing business with your own money and earning, I mean, that is something which is, you're satisfying yourself.
Yeah.
You're satisfying yourself. But talking
It's
to,
just a psychological
it's a psychological thing.
right?
Yes, yes.
But actually you end up losing money
losing
by
money.
not
You're losing
investing in
money.
it.
There are other options. Might as well, put it in other people's company and earn there.
Earn.
They are doing much better job. That's why they are probably, listed and traded
Yes,
in
correct.
exchange. So I will put my eggs there.
Absolutely fun.
Yeah.
I mean, so how to, but then this myth, standing.
Yes,
with
talking
people.
about the myth.
Yeah,
Talking about the myth.
correct.
So, simply put, leverage is the key.
Okay.
If you're able to leverage your business and, like making, if you have 5, then you should at least leverage 2 times at least the lowest leverage possible.
Yeah.
That is a very, very safe bet, because if your
Correct.
product is something that is selling and you have control over your receivables, 2 times leverage is the basic. When I say 2 times leverage, which means at least go get yourself a CC limit. That is what and now if you feel that you are getting a lot of orders and you want to grow like 10x or more than that, what will you do? Go and get additional leverage in form of bill discounting, both the sides discounting, like purchase भी discounting करा लिया, sales भी discounting करा लिया, plus CC भी है. तो imagine सिर्फ 5 करोड़ का investment करके you end up making 50-60 crores ka volume. I'm talking about volume.
Yeah, instead of stopping at just 20
but I have invested 10. Only 5 crore. That 5 crore has the potential and power to actually bring on the table another 10 crores.
10 crores.
That is what a smart businessman investor
would do. Yeah.
Yes, would do. Because कोई भी business करने उतरा है तो ऐसा तो नहीं सोचेगा कि नहीं मेरा business मतलब मैं इतना ही करूँगा. हाँ, I mean if there is a scope and if you have that acumen, business acumen and growth is your flavor,
why
go
would you
for
stop?
it. Yeah. So here, simply put, you do not know how to use your cash. That is why it is lying in your bank, and you term yourself as cash.
It's a waste of power which money generates.
So talking about debt, talking about debt, you can love it or hate it. You cannot ignore it, and it is here to stay.
Here to stay. Perfectly.
Yes.
I mean, at one point you can't grow if you don't have debt on your books. You're yourself capping your growth limitation.
Yeah. You're just trimming your feathers.
So we spoke so much on debt, and we had a very detailed discussion how debt is accessible if you have right practices in place, and why you should go on a debt. As you rightly explained, the leverage is important. So before debt, overall being funded is very important. Okay, whether it is debt or not non-debt, because I'm coming from an angle of a startup. When I'm a startup, I don't have a lot of vintage, and I feel that I won't get a debt, and getting equity investment makes more sense for as a startup founder, because I feel that is a easier, although it is not an easier approach. You end up doing so many rounds, so many meetings. But let's say I have money coming from my parents, my relatives, or a couple of friends pulling it together, and and they giving me money in equity, and I can dilute the equity and raise the money. No paperwork, no credit calls, no CIBIL, nothing, and I'm getting that money, and then I feel I should not go for a debt. This is better. What do you think, debt versus equity? What one should go for?
So when you ask this kind of question, there is no one correct answer to it. It is typically, these kind of decisions are driven by the promoter's strategy. What he wants to do end of the day. So if somebody who is trying to pull equity right at the seed stage, when he has just started off, or only at the ideation stage,
pre-seed, we can
pre-seed,
say.
yes. So that is a totally different kind of ball game.
Yeah.
Okay, so maybe what he has in his mind is a particular, a power pack proposition, which he is so much confident that he will have, investors lining. to invest. So at this stage, he wants to go in for research and development, or he want to, get the he wishes to initiate. So that is where he'll go with the seed, or maybe in order to get profitable, his scalability has to be huge, which cannot be done with the help of debt.
Right.
Now, if you personally ask me, for a client or a promoter who is in a stage where he has been doing business for 2 to 5 years, now he is he has now finally reached his growth stage.
Yeah.
So, at the growth stage, you'll have to decide. So, this is a call which is purely personal to the promoter. So, I can just give you 3 factors based on which you can take this call. So there are 3 factors, which is typically cost, control and risk.
Right.
So based on these 3 factors, you can take your decision,
Okay.
whichever stage of the business you are in.
Correct.
So what is exactly
Cost control and risk.
Yeah, cost control and risk. So cost is where, like, according to me, if you ask me my personal understanding of this particular factors, in debt, the cost is absolute low. Why? Because we are not really, diluting our stake.
Right.
So after a certain period, what will happen is my loan will get over and I'll be done with the loan.
Debt is a temporary cost,
it's a
basically.
temporary cost.
Equity sits with you as long as the investor is not ready to exit, or you are not able to give them exit. Equity stays with you.
Yeah, and then control. With debt, the control still remains with you.
Correct.
So again, debt wins here. Now coming to the risk is high with debt because you are always at the obligation to repay. But with equity, what happens is, at least for 2 to 3 years, whatever is your understanding with your investor, for those many years, you are there is no immediate outflow or payout.
Correct.
But yes, at all times there is a pressure to perform.
Correct.
So that is something. So now if you feel that
to meet the investor expectation.
Yes, to meet the investor expectation. So simply put, these are the 3 factors, and it is purely, I put this decision on a promoter, that I cannot decide from a particular promoter. So everything is, product is his, business is his.
It's a bit subjective also. It's very, very subjective. The situation. But I'm sure 8 out of 10 times the answer would come as a debt. Ideally speaking, in an ideal scenario, debt would always win over equity. Because as you rightly mentioned, cost control risk.
Again, so it is like, again I'll explain with an example.
Right.
So typically customers come to me with a turnover size of 10-20 crores. So at that stage, if they are coming to me and they are saying that, now I want to go to equity. So then I ask them, why equity at this stage? With 20 crores, what are your order books, or what kind of multiplier you are expecting?
Correct.
So, they do not have any idea. They just know that, debt is becoming a burden. Like there is a pressure of payout every month, like for EMIs or interest repayments. So somewhere they feel that, I want relief. I don't want to have this burden of paying EMIs. So that is where, they feel that, okay, fine, I will part with my little portion of my equity and just... So again, it is very subjective and personal decision.
Correct.
Yeah. So there is nothing called debt is better or equity, because talking from Totalgenix perspective, we do both debt and equity. But definitely equity comes at a stage. I will suggest my clients to go for equity at times when you feel that you are poised to scale at a rate which is massive.
Exponential growth is possible.
Yes.
Which obviously cannot be funded with a debt. Then at that time, equity makes more sense.
And then you are poised to do that. You have complete control over the outcomes. You can actually manage that kind of volumes. That preparation is already in place. All that is, stopping you is the access to funds. That is the point when you should go for it.
Correct. Absolutely right. See, when you want to scale big and scale fast,
Yes.
okay, that's where equity makes sense. But otherwise, that will make more sense because it is, as you rightly said, it is a short-term cost. It is a temporary cost, which will pinch you in the short term. But if your business is gonna do well in the long run, it will not at all pinch you. It will not at all remain in fact on your books.
True, very true.
Perfect. So now debt versus equity. Why debt? We have spoken so much on this, but let's tell our audience some of the funding products which are available in the market. As a coming from a finance background, we all understand there is a term loan, there is a CCOD, okay, there is a we call it loan against property, all these things. But what all different products which are available for MSMEs, okay, and in brief manner how they work. Basically, probably you can, I always say that, the way you have right transportation to reach right destination. Like from Mumbai to Delhi, you cannot go in auto rickshaw. You will take a flight.
Yeah.
But just traveling between the two suburbs of Mumbai, you don't take, your big SUV, or you don't take a helicopter. You will take a train, metro, public transport, or your small car. So like this, right vehicle for right destination. Similarly, I feel for right funding requirement, okay, there has to be right funding product. Okay, so basis this, can you explain to our audience or throw light on some of the products which are not widely aware in the industry, which are available for MSMEs, okay, and how to use them, and what are the different features of those products?
Fine. For any business, when they start,
Yeah.
the lifeline or the backbone of business is always the CC limit.
Right.
Okay, the working capital limit. So one should always go for a CC limit or a working capital limit first.
Okay.
Many people, they do this mistake of going with some other product. I mean, they don't go for working capital, but they go for any other product. May it be short-term finance like unsecured high-cost borrowing, or they take loan against property where they are actually blocking their asset. I mean, you can, many times I have seen that just to take 20 lakh worth of loan, they will actually mortgage a 1 crore worth
it's like
of
मच्छर मारने के लिए तलवार निकाल दी.
हाँ, तो these are certain things which I feel that you can actually you have access to better products.
Correct.
So now which products? So see, when I say working capital, in working capital also it is fragmented into two. One is when you have available collateral to give, or when you do not have any property as a collateral. When I say collateral, I mean property as a collateral, or FD, or you can keep any of your LIC policies, like the maturity value of your LIC policy will be considered as a underlying asset, something like this.
Right.
So if you have this kind of collaterals, what happens is your rate of interest is something which will be slightly lower. Slightly means considerably lower.
Correct.
Vis-a-vis a unsecured option where your rates will the difference will be in the range of 2% higher if we are going for a CGT MSME scheme, which is a RBI and SIDBI's initiative to support small medium enterprises in getting loans when they do not have any property as a collateral to offer.
Right.
Okay. So in this case, what happens is up to 5 crores, you can actually avail this loan without any property collateral. Go for either CC if you need working capital, or if you feel that you want to invest in for the purchase of machineries, or you want to invest in purchase of land and then further construction of factories on top of it. So that is like a project finance. We term it as a project finance.
Okay.
So even for project finance or capital expenditure, you can go for finance under the CGT MSME scheme.
Okay, so CGT MSME has both the products for working capital also and for the capex also.
Yes, but it is a holistic product
combination.
Rather than product, it is a scheme. It is just a guarantee. Like instead of collateral, that CGT MSME trust is giving that guarantee. So their guarantee is working as our collateral.
Nice.
Yes. So this is the
Fantastic.
actual understanding of this product.
So, I mean, sorry.
Yeah, please.
Is it accessible to everyone, CGT, MSME,
It
or
is
what is the criteria?
accessible to everyone, like be it manufacturers or be it traders.
Okay.
Okay, because they consider your stock and debtors as your primary collateral. So your drawing power has to be in place.
Okay.
Okay.
So both the manufacturers and the
And
traders.
traders, and to service providers also. Usually they give like very less. If for manufacturers they will, they give around 50 lakhs. So for a service provider they will probably give around 20 lakhs.
So under same product, service providers also can access the
Yes,
funds,
but
CGT, MSME?
yes, CGT MSME, but that is specific to certain banks.
Yeah.
So not every bank will actually offer this kind of loan to a service provider.
Okay.
Because how will they hypothecate stock?
Yeah.
Or debtors also, like they might have or they might not have. It is
Yeah,
very,
I mean, for service industry,
so there are
there
these
is nothing called
technical, practical
drawing
issues.
power. Correct.
Yes. So apart from that, you have mudra loan. So somebody who is just starting off and a small amount like 50,000 to 10 lakhs they can avail. So how do you do that? It's simple. You have started a company. Then if you have some work orders or any orders in hand to show, purchase orders, so you can just go to your bank. You can prepare a small report, project report, and you can also give the work orders that you have. Based on that, the branch manager there who has the power to sanction up to 50 lakhs. A PSU bank, a typical PSU banks, how their approach is, I'm telling you about them. So they can actually assess, and then they feel that yes, the person is doing legitimate business, they're actually getting funds in their account, they have serviced or they have supplied some goods, then in that case they will definitely understand what is the drawing power and give you a limit. It depends from, again I said, 50,000 to 10 lakhs. It is very much possible.
So 10 lakhs is a maximum under
For
mudra.
mudra. And anything over and above 10 lakhs will be covered under the CGTMC.
But is there any specific additional limit for female entrepreneurs under mudra?
So female entrepreneurs have got different kind of schemes. They have different kind of subsidies. So there is, there are these products under PMEGP, wherein
Employee Guaranteed.
Yes,
Pradhan Mantri Employee Guaranteed Program. Correct.
Where they are also doing skill development. They want the priority sector lending to have better access to finance. But that is at the stage when you are starting off.
Okay.
Yes, when you are starting, like a Startup India.
Startup India, Stand Up India.
Stand Up India. So at that stage, what you do is you come up with a complete project report. Then they will fund. If you are a manufacturer, they will give you funding for your factory or machinery. Plus, they will give you working capital. So they'll give you a comprehensive limit where they will say that your contribution, depending on if you are a woman or if you belong to a SC/ST caste. So based on these parameters, they will decide that your contribution has to be only 20%, 10%, 15%. So there are such, and remaining can be entirely the investment can be funded by, this kind of schemes.
Okay. So honestly with you, when we say mudra loan, market में एक myth है. ये सिर्फ टीवी पे देखने के लिए या पेपर में पढ़ने के लिए अच्छा है, बट ये मुद्रा लोन कभी मिलता नहीं है, कितने भी बैंक के चक्कर काटो. I don't think so there is enough awareness on how to avail these kind of products like mudra loan, or probably lot of SIDBI related products. In fact, SIDBI related, I feel there is not at all any awareness like which type of loans actually are available under SIDBI and how to access them, where to start, even for mudra, where to start, where to do the application. Of course, you can go on Google and do some online application, but how this works really, and do this really work? Do really banks give loans under mudra? Because this is entirely the interpretation in the common man's mind that these loans just remain on paper as a good announced scheme by government, and the money never actually transformed to a common man.
Okay, so month on month, we at least do 10 to 15 cases of CGT MSME.
Okay.
We are on an average disbursing, 4 to 5 cases under various SIDBI schemes. We are official channel partners with SIDBI also.
Wow.
And these loans do happen.
Even Mudra?
Mudra, yes.
Okay.
So I'll tell you, so the underwriting is different for Mudra and it is different for CGT MSME and SIDBI related.
Okay.
So Mudra is somebody, as I said, who is starting off.
Yeah.
Okay. The key to getting these loans are typically getting the right project report made. Once you have the project report, and against that, if you also have some experience in your business, like you have been conducting your business from at least last 6 months and you have shown some kind of sales that you have done, even if it is not very big volume, but even then you have at least invested your own money and done, and also you can show that you have some valid work orders in hand.
Yeah.
So based on these factors, if you really present it in front of the branch manager of any PSU bank, so there are more than 80% chances that your loan will actually get through. I'm talking about the Mudra loan.
Yeah.
Now coming to CGT MSME or SIDBI. Let's talk about SIDBI.
SIDBI, yeah.
SIDBI's products are versatile.
Okay.
And according to me, every MSME should try to associate themselves with SIDBI.
Okay.
The reason being, SIDBI's products, if you compare with any bank, the rate of interest will be at least 1 to 2% lower.
Okay.
And their underwriting is very different from how a normal PSU bank or private bank will underwrite.
Okay.
So now talking about why should one go to SIDBI and for which products?
Yeah.
Okay. Rather than listing down the name of products, I will say that when should you go to SIDBI?
Yeah.
So in SIDBI, there is a concept of greenfield and brownfield projects. So talking about brownfield is where you are already an established business. When I say established, means you are into existence for more than 3 years. Now you are going to SIDBI, you are saying that I want additional machineries.
Right.
So up to 5 crores, whatever machinery you wish to purchase, SIDBI will give you funding for that machinery to 100% by taking 25% as a FD.
Okay.
The FD will continue to earn its interest, and at the end of the tenure, which is typically 5 or 7 years, post that you will be, the FD amount will be returned to you along with your interest.
Accrued interest.
Accrued interest.
Correct.
Yes, compounded. Now in this case, SIDBI is not only helping you with finance, they are also helping you get additional interest subventions. So there are various schemes, like one of the scheme, if I have to say, where it is gift scheme. That is for your technology upgradation.
Okay.
So if you are doing a technology upgradation, let's say your rate of interest is bare minimum, they start their rate of interest range from 7.75 to it goes as high as 9.5.
Okay.
Okay, so this is typical range. So let's say our rate of interest is 9%, and with that additional interest subvention, what happens is your effective rate of interest is around 7%.
Okay.
And this is only possible with SIDBI. So this is their one of the product. Now they have another product where if certain machineries are energy efficient, so in that case also they have additional interest subvention, which is over and above the rate of interest which is applied. So this is one thing. Now SIDBI will not only fund you for new purchase of new machineries. Let's say you want to go for a complete project finance. So SIDBI can assist you in purchase of land plus funding for the construction plus the machineries that you will be needing to install.
Okay.
So that will be considered as a complete project.
So usually I don't think so any bank funds you for buying a land, but SIDBI does, you are saying, if you are establishing a business
Yes.
with the obviously right set of documents in place. So
Yes.
this falls under greenfield, or this is still a brownfield?
This is brownfield and greenfield both.
Both.
Yes.
So I'm already having a business and my expansion is there, where I require to expand, and for that I require a funding.
Absolutely.
Correct?
Yes. So now with SIDBI, once you have become SIDBI's customer, let's say after 1 year or max 2 years, they have a special product called GST Sahay.
Okay.
What they do is maximum up to 1 crore or maximum up to 2 crores depending on your exposure with SIDBI. What they will do is they will give you demand loans.
Okay.
Demand loans means if you wish to procure some raw materials, then they will finance those procurement. It is like a purchase bill discounting.
Okay.
The best part is their rate of interest is 9.5% annualized.
Lovely. This is under GST Sahay.
Yes. So they will also give you a period of 3 months, 90 days. So you'll have to revolve.
Yeah.
It is nothing but like a purchase bill discounting.
Correct.
But this kind of aggressive pricing and the kind of support that they give to their existing customers is unparalleled.
True.
Now they have also started giving working capital limits. So let's say you have approached SIDBI for a project loan. Now when you do such an investment, once your investment is complete and you start with your commercial production.
Operations. Yeah.
So that is the time when you also will need working capital.
Correct.
So that is also something which SIDBI will
take
give.
care of. Yeah.
Yes. So under their working capital schemes, what happens is they can actually, so since they are not a bank, they have tied up with IDBI, Yes Bank, but you are still a SIDBI customer.
SIDBI customer.
Yes, but only the bank accounts for the transaction
Are with these banks. SIDBI in a way underwrites.
Yeah. The rate of interests are also. So when SIDBI is taking, now in case where the projects are exceeding 5 or 10 crores, they will ask for collateral.
Yeah.
Okay, so in that case also SIDBI will ask for collateral in the range of 50%. It can fund you at, even if you give 50% property as a collateral.
Okay.
On special cases, if your financials are strong enough, or they derive comfort after having meeting with the promoter and the project that you have presented, they can also take, because I have seen one of my customers have actually availed a loan from SIDBI where they have given property as a collateral only 25%.
So 4 times of the value.
Yes.
Is their entire funding.
And rate also, if you ask me, the rate of interest which was charged was only 9.35%.
Wow. Now this is interesting.
Yes. So this is only possible with SIDBI.
But then how to reach to SIDBI? Is the Totalgenix a right platform?
Yes. So we are official channel partners with SIDBI.
Lovely.
We actually help. We are the facilitators. So since SIDBI does not have many branches where actually clients can walk up to, or they also have website where online also they can actually launch their application. When I say launch their application, they can actually apply for loan. But there also the documentation part, or the kind of questions asked, not every SME would be in a position to do the right key in the right set of information.
Correct.
So that is where we come into play. So either we can advise them, or we can take up the entire task of liaising with SIDBI and getting their loans done.
Okay. So it's not just about facilitating the loan, right? It is more about planning the entire funding strategy.
Yes.
So how much of funding strategies the Totalgenix is versus the just being a loan facilitator, which many people are? What do you see where you stand as a funding strategist?
Okay. So people, when we started off, we were called as DSAs. But I recognize myself as a consultant more.
Correct.
We are actually the business strategist, as you rightly mentioned. So I don't want people to just come to me, when I say me, to Totalgenix for just taking a loan. I mean, normally our clients don't tell us कि madam मुझे ये वाला loan करके दो. I mean, we will tell that what is the loan you should
be
you should be going for.
Correct.
So we start from understand. So what is our expectation with Totalgenix? So when our customers come, the first question we ask them is, आप हमको आज से लेके 6 महीने की planning बताइए. What is it that you wish to do?
Good.
What is your current scenario?
Correct.
What is our existing debt like? What is the cost of our borrowing, current cost of borrowing? From there, then we start having a proper fundraising strategy.
Okay.
And if they tell us that, okay, we want to, I mean, we are getting some big orders, but today we are not sure. We have some idea that we will get it. So I cannot give them some term loans, right, where the EMIs will start immediately.
Correct.
So I have to do the right kind of provisioning for them, or I have to design a strategy by which today I am poised to handle 2x
the business
if it comes to me. So what? So there are various fundraising platforms. Then there are various products that we can actually suggest, like many of the products that we have discussed, like bill discounting, taking unsecured business loans, or we can also do a hire purchase kind of arrangement where what we say is go asset light, instead go everything take everything on hire, and then you can actually focus more towards funding your working capital rather than blocking your funds in fixed assets.
Right.
So these are everything driven by the strategy and what is the planning that the promoter has discussed with us. So there is a projection that we come up with, and then depending on the projection we start doing a backward integration and calculation, and we decide like how much should be the actual active debt in the books at this stage. Are they over leveraged? If they are over leveraged, then we'll try to consolidate their small loans by giving them one single loan, or we can also do lot of unsecured loans, but when they had taken these unsecured loans their exposure was bigger. So just to give as an example, so I have taken 3 crores funding. Let's say I have taken 3 crores worth of funding. So in that case, my rate of my EMI outflow will be anywhere between 12 lakhs per month. But after 1.5 years or so, what happens is the same, the outstanding on those loans are no more 3 crores, but maybe it is 2 crores or something lower than 2 crores, 1.8 CR or whatever. So if I tell you, Omkar, like today, if I raise another round of unsecured loan for 1.8 crores, so my EMI for 1.8 crore will come down to somewhere around 7 lakhs.
Correct.
Where it was 12 lakhs. So I simply say that today, now there are a lot of people who come to me and say that, what about the foreclosure charges? So we actually do a proper calculation and we tell the client that yes, if in a business, most important is how much money is at disposal today.
Right.
Against if I say that, we will do a complete consolidation by refinancing, simple as that.
Correct.
We will take some top-ups on the existing unsecured loans and we'll close some of the other high-cost loans. So in this way, what is happening is I am just restructuring the loan, and I am
yet saving a lot of cash outflow.
So you can say that instead of repaying the loan, what I am doing is I am extending the tenure. But today, if I am talking about today, still I am in a position to save around 4 to 5 lakhs.
Correct.
So immediate ease of 4 to 5 lakhs, he can actually infuse that funds and he can use it in his business and he can actually earn whatever is his profit margin.
I mean, good to know, really. There are so many products, and
So
Totalgenix
it is
is doing
totally
fantastic.
strategy
Yeah,
driven. I mean,
fantastic job.
anybody who comes to us and they talk about products, we are really we don't know how to. We start from cash flow management.
Yeah. Guys, as we learn, I would say three key takeaways today we have from our podcast and our lovely host here, Chandralekha. I think first is obviously, I mean, you will hamper your credit taking capacity if you are trying to hide your true numbers. You are having a short term vision that you want to save GST, you don't want to pay so much tax, then that will not give you a exact, eligibility to avail good loans. So that is the first key takeaway. Second, obviously, there is so much myth that one should not go for debt is not good. So that is completely wrong. As we understood today by giving a beautiful example, how Chandralekha explained us, leverage is almost like a eighth wonder of the world. So go leverage your business and scale fast and grow fast. And third and last, I mean, obviously, these loans, the myth that this SIDBI, Mudra, CGT, MSE, these loans are not for us. We don't know how to approach. These seems very complicated products. उससे अच्छा है we will approach the bank and take the simple loans. No, if you have a right consulting partner like Totalgenix, you definitely stand a chance to avail these amazing products which we just got explained. So I think these are the three amazing key takeaways from your podcast. And thank you so much, as I
Thank you. Rightly
find
concluded.
you a right advisor here on loans and funding, and I'm sure we will be throwing more light in our coming podcast as well. Thank you,
Thank you.
Chandralekha.
Thank you, Omkar. Thank you, team.